What does the result hold for the entire country of the United States, plus the real estate market in itself? Let's see how the presidential election affects a real estate market. During election years, uncertainty can make both buyers and sellers cautious. This effect, known as election hesitation, stems from concerns about future economic policies and their potential impact on personal finances and the housing market. Home buyers and sellers might delay decisions until after the election results are clear, especially in regions where political turnover can significantly alter economic outlooks. This caution, however, tends to cause minor fluctuations in most areas, with more significant impacts in political sensitive regions like Washington, D.C. Affordability is a critical factor influenced by policies set by the administration in power. Potential policy shifts, such as adjustments to the mortgage interest deduction or changes in property tax deductions, could reshape incentives for home ownership. Future administrations may prioritize affordability and housing supply, but complex structural issues like inflation and interest rates will likely continue to play a major role in determining market conditions. The Federal Reserve's actions often have a greater impact on the housing market than the election year policies. If the Fed adjusts interest rates downwards, housing affordability may temporarily improve, easing conditions for buyers. Conversely, high interest rates, currently a significant barrier, may keep prices elevated as potential sellers are reluctant to lose low rate mortgages from prior years. Elections outcomes might indirectly influence the Fed's approach, but the primary driver here is the economic climate rather than the political one. Both parties have shown some interest in addressing housing shortages, which have driven up prices and limited options for buyers. Analysts suggest that policies promoting new construction or incentives for home builders could help improve housing supply. Long term strategies to address housing supply could alleviate the affordability crisis, but effective policies may take years to implement fully, meaning the market won't see immediate relief after the election. Historical data shows that home prices tend to rise in election years, albeit influenced more by broader economic trends than election itself. For example, during past election years, market trends were shaped by events like the financial crisis of 2008, the COVID 19 pandemic of 2020, and many more. These situations often amplify market volatility. And while elections can add to this uncertainty, they're generally one of the many factors that shape housing trends. Despite the uncertainty of election cycles, real estate remains a solid investment that benefits from long term stability and resilience. By focusing on personal goals and recognizing that key housing needs and market fundamentals remain strong, buyers and sellers can confidently make moves that build their futures regardless of political changes.